I forget to do the tech on that side. Isn't it amazing what we can do? Here we are connecting from all over the world, being able to this fantastic technology. Oh, Natalie, it's giving me some problem.
What is the problem? What is the error that it's giving you? We'll sort it out. We'll sort it out.
So I don't know. We're going to have to. It says it's streaming. Oh, who knows? Hello. I am Ann Wilson. I'm your host for the World of Wealth workshop. I'm founder of the Wealth Chef Companies, the author of the best-selling book, The Wealth Chef, creator of Financial Freedom University, and mostly just so thrilled to be able to be here. I am streaming from my home deep in the bush in Africa, and this is just part of the wonder of what we're able to do. You know, the internet and technology has created unprecedented opportunities for us to live extraordinary lives, for us to really get clear of what we want, because the barriers of access and entry, geography, the limits that used to limit us so much in terms of how we worked, how we earned, have been lifted. But also the internet has created extraordinary opportunities for us to create powerful portfolios of assets, to invest far more directly, to cut out the middlemen. And this is so important that we understand what is now available in the world of wealth that wasn't even available 5 years ago, 10 years ago, and certainly not, 20 years ago. And the devastating reality is most people are still operating when it comes to their financial well-being, to their investing, to looking after their retirement, in a way that was maybe appropriate 50 years ago, but it's not appropriate now. They are, going through financial advisors and archaic financial institutions that are charging them ridiculous fees and costs because they just don't understand that you don't have to do that anymore. You don't need to be paying ridiculous costs and fees, and also don't realize that there's a whole lot of asset classes available that's, to really get not only great returns, but far safer returns, creating this portfolio of assets. So we've already covered a lot in the two parts that are already available to you. So I hope you've gone in. If you haven't yet, make sure you catch up, because all of these lessons build up on top of each other. So in training part 1, it was all about understanding the foundational elements of wealth, understanding what it actually is. And it was also to get you really thinking about what the bleep do you want? Because you cannot start living a life that is yours if you haven't defined what your life is. And claiming back our agency on what do I want? What do I love? What is my life to be lived? What is your life to be lived? Not what we believe that society requires of us in order to be safe and fit in, not our parents' life, not our religion's life, whatever that is. And so I hope you've also had fun exploring what could that be? What the bleep do you want and why you want it? We also covered the 10 asset classes that you need and those type of assets, what an asset is to work for you. And now in part 2, we get to the key element to say, well, you really understand now that only assets can create freedom. More money is not what we want. I know it sounds ironic, but surely, if you've got money problems, you need money to solve money problems. No, and that is one of the devastating things. It keeps people slaving away at the altar of income. If I just work harder, then I'll be okay. If I can just get this business going, then I'll be okay. If I can just stop my kids needing so much damn shit, then I'll be okay. If I can control my own desires, then I'll be okay. And what it prevents us understanding is the full ecosystem of wealth. And on Sunday's training, I'm going to be bringing all of this together, these 3 parts, plus, the part that's going to be available tomorrow, all together to really show the formula that creates the wealthy ecosystem, because it's never one thing, it's never one asset. And so also breaking out of that lottery kind of mentality of the thing that's going to rescue us. No, it's not crypto. No, it's not that business. It's not one property investment. It's putting together a portfolio of assets that can create you great solid returns, but it's also making sure that you have a wealthy money flow. And this is so important. The two key elements that will create your wealth is having a wealthy money flow and a growing net worth. Your net worth grows by you creating these assets that can grow in value and earn you income. And your money flow, creating a wealthy money flow, is understanding the full picture of how money flows in, or the quality of the inflow, the different kinds of inflow that you can have. Yep, that's not all created the same. And then, really importantly, the outflow. Where we choose to direct our time, our money, and our energy, the three resources that we're given to create our extraordinary life, literally creates our lived experience. That what we're doing with those three things right now is creating our future experience, whether that's going to be good, bad, or indifferent. And so it's so easy to neglect the outflow when we're so busy focusing on just how to bring in more. But our wealthy life is created by this flow. And so in part two, we go deeper into the money flows of the wealthy and the fourfold money flows that there are. And so, there's so much covered in part two, but really go and understand the fourfold money flow. But if your money flow faulty, you'll never be able to live and create a wealthy life. There's also, I go deep into understanding where to start investing, how to build that net worth up. And we dive into stock market and strategy that I use to create my freedom, starting off with equity investments in the stock market and really showing you that it's a lot easier than most people think. And I share with you why I love index trackers. Financial advisors going and cost you your wealth. And I show you how to increase your returns on your assets by over 70% just with one small shift. So such a wealth of information here. And you can also get to see how to work out what you need, the power of compounding. There's compound calculators. Today we got a beautiful email from a guy called Peter, and who said he wonders, and just Peter, if you're here or if you're watching the Q&A, thank you so much for sending that in. It means so much to me and the team, knowing that what we do and what we put together makes a difference in people's lives. And Peter says, I just have to say that this is quite literally the best and most valuable free course I've ever seen. And I've seen a lot over the several decades now, and is brilliant. And I wonder if people are truly getting how rare and precious this knowledge actually is. And this is part of the challenge. We see something free and there's no shortage of that online. So don't let the aspect that this is free make you think that this is not deep value. And this is such an important to understand the difference of price versus value. We only get value from something if we actually use it, if we implement it and we use it to change our life. And that's what value is really about. He says, I haven't gone through the whole thing yet, but from what I've seen, this could be easily priced at over $1,000 US. Thank you so much so far. And thank you, Peter, for your feedback. It really means a lot, because why do I and my team do this? Because we see the devastation, we see the suffering, we see the heartbreak that doesn't need to be from people just not being taught what should be a birthright, should be a core part of our education. And so go in, do the training, do those videos, and then let's dive in and get your questions answered. Because at the end of the day, that is also what's so important. Getting that clarity, feeling that you've got a safe place to come and share wins, ask questions, get clarity, because money should not be a taboo topic that we don't talk about and get clear on. Great. Thank you, Peter. I think Peter might be here. Amazing material and presentation. Great. So Natalie has shared some of the questions that have already been posted. So I'm going to dive in on that. 2 questions from Shazadi. What a great name. She says, I'm a small freelance makeup artist based in South Africa. Some months my business breaks even, other months it doesn't, and some months it's profitable. So I can't rely on it as a consistent, steady source of income. Usually the profit just gets reinvested to grow the business. There's a fair potential. However, from the training I watched today, Anne makes a lot of sense when she says something to the effect that you can't keep just reinvesting without drawing anything out because it doesn't create a wealthy flow. Absolutely. So she says, so assuming that on a positive month, I could draw, say, 5,000 or 10,000 Rand from a business, what should be my next step? And what should I do with that money in order to work towards asset creation? So this is such an important point that Shazadi has raised here. And I see so many people creating businesses and they get hooked into believing that their business is their greatest asset. It can be, but most people's businesses are cash flow machines, not an asset that they could sell. And the devastating thing is I see a lot of people creating great cash flow machines, but they never take that money out and convert them into wealth generating assets that can serve them for life. And they get caught into the just reinvest in the business or reinvest in themselves. And it happens a lot in the online industry, you know, and so the money just gets turned back in, and it just creates this crazy cycle of expenses, a bit of income, stays in this bubble. This also happens when people want to minimize tax and they let an accountant advise them, no, put expenses in, don't distribute any of that money, don't pay yourself, because then this is how you avoid tax. Well, a great way to avoid tax is just never earn any money. We must never let tax wag the tail of your wealth dog. Tax is a quality problem. You need to be getting money out of a business, yes, in a tax efficient way, so that you can actually create assets. And this is when so many people create businesses thinking this is going to be their vehicle to a wealthy life. But in fact, it just ends up with a crazy boss who never gives them a break, who expects crazy requirements from them, yes, themselves, and they never pay themselves. And they just end up in this devastating cycle of poverty. So there's a couple of things that you need to do. Firstly, you've also got to look at businesses in terms of their cash flow, just in terms of your personal finance, that we create these different mechanisms. And into the part 3, I go through the 7 steps of the wealthy way. This is the path of the wealthy way. These are the 7 components that you need, almost elements or pillars that you must have to create a wealthy life. Well, a business needs to be doing the same. And so just as in your own life, we work out what the bleep we want. What is the purpose of your life? Why do we exist? Why are you doing this thing called life? And what does that look like? And what's the price tag? You need to be very clear on what is the role of a business. No one creates a business or should be creating a business just because you're bored and you've got nothing to do with your life. Well, if you want to, that's fantastic. But most businesses are there to provide an outlet for creativity, value exchange, but also to bring money into your life. And so if you're not taking money out of that business and creating a difference in your life, then it shouldn't be there. So we have to be really clear that money needs to be working hard for you, but a business also needs to be working hard for you. And as you're building a business, fine, there might only be small amounts of money, but the discipline of paying yourself first, which is what also can be called a profit first scenario, is so key. And this is why it's also so vital. You'll start seeing similar patterns. We follow in the money flow patterns that I go deeper into in training number 2. One of the most important wealth principles that you have to apply is the discipline of making your freedom, your financial well-being, the number 1 bill you pay. So often people are feeding themselves the scraps of their life. If there's anything left, then I'll vest. If there's anything left, I'll build up my cash safety net. They do it with their time. Maybe if there's anything left after I've been distracted on social media, following everybody else's agendas, I might do some of the things that serve me. Creating a wealthy life is 20% skills and 80% behavioral. And the behavior and the discipline of saying, I'm going to pay myself first, I'm going to invest a certain amount of money every single month from whatever comes in, no matter what, is key. And that's where it also has to come to your business, to have a discipline to say, as money comes in, a certain percentage is taken out and is put to profit. That is its point, because it's so easy to pay everybody else first. It's so easy to pay all the rest of the bills. And instead, when we do this, we trigger a deep message to ourselves, to life, to the universe, that we're serious about this, that we understand the principles of life, and we're prepared to take a stand for ourselves. Because after all, if you're not going to stand for yourself, nobody else will. And this is part of that commitment to vision, to life. Because when you do that, you also use your creativity. You find other ways to pay the other bills. Because a lot of people say, but Anne, if I invest, make that commitment to invest a certain amount every month, how will I pay the other bills? Well, you'll make a plan. And you've also got to look, if there's a problem with that, then something else needs to be adjusted. But if we keep just making ourselves the last priority, that's all we ever going to get in life. So now there are also ways where you can stabilize money flows. And I see a lot of people who are contract workers, who are business owners, who have variable incomes, maybe it's seasonal income, say to me, well, and I can't put in place a consistent money management framework. I can't put regular investing in place because, my money is variable every month. And so they live this very hand to mouth, quite naive and almost juvenile way of living, and going, no, we've got to get more perspective. We've got to stop living life just paycheck to paycheck, contract to contract. And this is why tracking your money flow is so important, because you start seeing patterns. You go, oh, okay, which are the months? When do they come? What is the averages I can work out? So now you start taking a bigger perspective, and you put in place what we call your reservoir account. So all the money that comes into your account should never be going into a transactional account. It should be going to an account that catches it all, and then you can stabilize the outflow that comes in. And these are some of the mechanisms that enable us to create wealthy life frameworks. Often people think freedom is about having absolutely, no limits, no boundaries, no edges. We can do what we want, when we want, wherever we want. And absolutely that is it. But the irony, and this is the paradox, real freedom is created by having frameworks. It's having systems that we can rely on. Truly successful people have in place a series of mechanisms, frameworks, processes that they just follow. A process for investing, a process for saving, a process for managing their money. The more we can automate these things and we don't make it variable, well, maybe I'll see what I feel like today and tomorrow. This frees more of us, our real creativity up, for living our life and doing the things we should be doing, not trying to make small decisions. And so understanding these frameworks for creating a wealthy money flow and creating a growing network is so key in implementing that. So with 5, go and watch part 2, investing in your index tracker investments in the stock market. I explain why this is so key, why it's the easiest asset class to invest in. It's also the one that's going to enable you to take benefit of tax efficient mechanisms, of tax deferred investments, of tax-free investments. So this is where you start, because you can start with small amounts of money. It can be automated, and you do it step by step, not in sort of crazy leaps. And this just gets put in place. And that's how you grow this solid, great base of your investment pyramid. Now on Sunday's live training, I'm going to go deeper into how to put together a globally diversified portfolio of assets using all these asset classes, and share with you the different percentages to go in there. But what's important now is to understand the commitment to that regular investing, and where you start is in your index tracker investment in an automated way using the KISS investment strategy, which I teach you in part 2. Great. Jenny says, so informative and easy to understand and implement. I'm all fired up. Fantastic. Teddy says, it's eye-opening. Christine said, really getting me interested in thinking I can be a part of the path to financial freedom and learn to invest in having assets. Hell yes, you can. Great. So a second question from Shadi says, how do I start my journey towards asset creation without investing my own money? So the first key principle is, like everything in life, we've got to be prepared to step up. and put our own skin in the game. So you are always going to have to and put some of your own money, time, and energy in. Those are the resources we have. Your resources have to come in. This is part of you are this chief freedom officer of your life. You are that greatest asset. So this is the first thing that has to flow from you. But what we have to break is a belief that you need a lot of money to make money, that in order to be an investor, you need these crazy big lumps. Not at all. And that's why I've shown you can be investing from 300 Rand a month, from 25 pounds in an ISA, in a regular investment, from 50 euros, from $40. In fact, there are many platforms that also allow you to do fractional investing. So putting your own money in and committing to this is more of an action that you show into the universe, which I've already started. So I just want to talk about that. Now, the next thing is understanding what an asset is. Creativity is what creates assets. So think about a lot of what would be called passive income streams: creativity, writing music, writing a book, royalty-based investments. Where can you add value to people? By using leverage through the internet, through systems and processes, through automation, through expansion. This is how you start creating assets, not from money, but through your resources and through your knowledge and through your energy. And a lot of the assets that will then end up really serving you are going to come from that. But we also do cover, and in part 2, I go through each examples of each asset class, where understanding what an asset is, you can create this. So for example, I share the story of Stan and Nadia, who started this journey, and they got in place their core frameworks, their regular investing, they blitzed their debt, they got their money management solid, they were giving great leadership to their life, but they wanted to accelerate that. And so they learned and implemented an auction strategy in real estate, which I had taught them. And this was how to basically control assets with no money of their own and on-sell those before they had to complete the sale by lining up buyers. And then they got to keep the difference between the price that they paid at auction versus the contracts that they sold on, by having this lined up. And in many cases, you can do this. And a lot of people will, but Anne, can you do that? Yeah, you do something that's called buying at auction with an and assignee contract clause in that contract, and you just assign on that deal. And they were able to do, I think they did 5 or 6 of these. And with that, they made enough money to buy their dream home with no money of their own, all created by these, and buy it in cash. I share with you how Tex Shalala had also put his base in place and then wanted to accelerate this. And so he started investing and building up a low input business in vending machines. And because he understood how to know the money flow pattern of an asset, look at the numbers to see that it actually worked. Not somebody just told him, but actually go, I can see how the flow of this. And this is why it's so important we get the skills to be able to evaluate whether a deal is or isn't going to work for you. He bought his very first vending machine using a credit card because he knew in the right place with that profit, he could pay off that credit card with the profit from the vending machine. Once that has been done, he bought a second vending machine, again on that credit that had been paid. Now he had 2 machines. Then he was able to clear that credit, and then the profit from the vending machines, he was able to buy 2 more vending machines. And so in 1 year, by putting in hard work up front, absolutely understanding what he was doing, but being prepared to be creative, resilient, and tenacious in terms of this discipline going forward, within 1 year, he had created a passive income generating machine in the form of his vending machine business, which was bringing over $2,500 in profit, which you could then use. Remember, it was a cash flow machine, and he was very clear what it was. He didn't consume those. He used that money to go into his asset drawer to buy longer lasting assets, real estate, stock market investing, because he understood that it was a cash flow business he had created, not an asset. And that is how he accelerated his time to freedom. So go and look at that training and really understand, it's knowledge, it's inspiration. It's going, I didn't even know that was possible, is how we create that freedom beyond just the save hard and work hard. Great. So Sandra De Silva says, how do you know what assets to invest in? So Sandra, go and watch training number 1. And in there, I unpack the 10 core asset classes. So firstly, it's a portfolio of assets that are going to create your freedom. And you need to have a blend, almost a recipe of these different asset classes. And in the training on Sunday, I'm going to go deeper into designing your wealthy portfolio of what are the percentages you'll have of those different asset classes. And now in training number 2, I start with the stock market and I explain to you why index trackers are so sexy, what they are, and why costs matter so much. There's very few things we can actually control in life, but the things we can control is the contributions we make to our wealthy life. 1, consistent, regular contributions. You get to control that. The second thing is consistency. Consistent investing is vital because this triggers something called cost averaging. It also takes out the emotional, shouldn't I be investing? And most important, it stops the devastating trying to time the market. Is the market up? Is it down? Understand this, nobody wins in that way. That is the way to lose your money. It's following a consistent, proven strategy consistently is how you create real sustainable wealth. We have to remove emotions. We have to remove fear and greed. That are the very things that keep people, prevent them from investing. So that is what you start in. And then you can add the other asset classes like real estate, and there's various ways, and we go deeper into that. I also, in part 3, which is revealed tomorrow, there's also a deeper element in that component. But you start with your index tracker investments because they're so easy to automate. Melody says, hello, Anne. Thanks for all the information. I've opened up my Desjardins account. Fantastic. But I'm not sure what to do next. Should I invest in an ETF? And how do I choose one? There are loads. Sorry if you're planning to cover this in a later session. Melody, well done for taking action, diving on in. And this is how we create. So it's so important, this fine line between getting knowledge and skills. So we're not just being a crazy octopus on roller skates, which I talk about in the part 2 training. It is about going, okay, what is the framework of knowledge and skills that I need? And then it's implementing. It's not waiting until we have all the information, not waiting until we feel ready, because you only actually get competent by doing. There's a lovely saying that says you can't steer a parked car. We have to turn the engine on, get it in gear, move it out. Now, you don't have to go racing on a motorway at 200 kilometers per hour. That's just friggin' crazy. Learn in the back street, get it comfortable. And this is the same with your investing. So you're going to start with small amounts, build up your confidence, see, it's not that scary. It's not that confusing. Yes, there's an entire financial industry that wants to make it seem complicated, that wants to tell you it's gambling and all this other shit. It's not. So well done. You've taken that first step. You've got your digital broker. So yes, an exchange traded fund is a form of index trackers. So your index trackers come in 2 forms. You can buy them from the fund house, and that is the form of a unit trust or a mutual trust fund. Same thing. Unit trust fund and a mutual fund are the same thing as collective investments. And via your online brokerage platform, they're effectively buying that form of investment directly from the fund house. The second form of index tracker is where the same fund is created, but instead of selling units directly from the fund house, those units are sold on the stock exchange. And that's why it's called an exchange traded fund, but it's still an index tracker. So for many of you, for those of you in South Africa, in Europe, also in Australia, in many places, an ETF version of the index tracker is going to be what you're investing in. For others in the UK, for regular investing, your unit trust version, and many of you in the US and Canada, is going to be a more cost-effective way. So it's just the 2 forms. So absolutely, Desjardins, it is ETFs. So the first thing you want to do is remember costs matter. So we want to keep the cost of investing right down. And this is why it's so important you watch that video in part 2 to understand the impact of costs. Often we go, what's 1%? What's 2%? And most people don't even know what the costs of their funds are that they're invested in, they make a massive difference. A 2% difference in cost will end up in a 70% difference in the result that you get. And that's a 70% negative. And this is why it's so important we eliminate unnecessary costs. The unnecessary cost of a financial advisor's fee, of actively managed funds. You don't need that because they actually don't add any value. They just create drag and keep you from the freedom you should be having. So on Desjardins, there's a list of exchange traded funds which are trade free. So there's no cost to invest in that. So that's the first list you're going to look. So you want to be choosing an exchange traded fund that is the lowest cost possible. Then start off, for most people, starting off, invest in a global index tracker fund. Yes, what is so sexy? You can literally choose one fund that will give you the world. It will give you diversification across different geographic zones, across different sectors, across different markets, all with one investment. And it is so powerful. And there's such a complexity that comes along because we are indoctrinated to think complexity must be better. And many people will show me a portfolio that they've been put into by a financial advisor, and they'll be in 10, 15, 20 different funds. So it looks sexy and crazy, and there's duplication and overlap, and you can't see the wood for the trees. And a person goes, well, no wonder this is complicated and difficult. And people say, but Anne, really, can I just have one fund? Because when you understand how to open a fund fact sheet and look at what's in it, you'll realize that, wow, with a single investment, a global, or what's also called a world index tracker fund, you'll be owning shares in over 3,000 different companies. You'll be owning shares in the developed market companies and emerging markets in every sector across the world. Now, there are obviously refinements you can make to that, but as a starting portfolio, it's going to give you the most sexy, awesome, fantastically diversified base. So that is where you start. Jenny says, I've created an easy equities account last night. Woo-hoo-hoo! And how do I pick the index trackers to invest in? Well, Jenny, basically the same as the question that I've responded to from Melody. You're going to find and you start with a global fund. And on easy equities, there is a compare function. So you're going to open it up and see so the key thing is we always start with the portfolio. What do I want? I want the most diversified portfolio. So you choose the sector, and a global index is a great place to start. Then you go, of those global index funds, what is the lowest cost? And so you look at what's called the total expense ratio. Emma says, me too. It's quite overwhelming. Don't worry. This is the thing. When we get in it, we allow it to be confusing. We allow it to be a bit messy because we have that humility and the acceptance that you're stepping into a new world. When I went to go and live in France, why? Because I could, because I wanted to. I'd wanted to live in Paris, and I did for just 3.5 years. I'd never spoken French before, so I got a teacher, started learning. Everything sounded foreign. I swear my cheeks got stiff from trying to make different sounds and different words. It felt awkward. I felt like an idiot trying to practice. I would say a few words and then somebody would respond to me and I wouldn't understand a thing they said. It was so often when I went, no, I'm terrible at this. I felt shy, awkward. There's something happens as an adult. We suddenly create this belief, many of us, that we're meant to just know shit that we've never known before. If we start something new, we're meant to just be great at it. And if we're not, then it's, oh, well, it's not for me. And we get all awkward. We've lost the ability of kids to just go, hey, I'm experimenting, I'm learning. Wow, of course it's confusing. I'm in the new sandpit of the world. So when we get into investing, this is why it's so important that, one, you have a community around you, you have somebody to guide and direct you, and that you also do it in small baby steps. So you learn in a way that isn't high stakes, that isn't going to freak you out. You go, okay, I'm adjusting as I go. Great. Dawn says, you mentioned a brokerage called Interactive Brokers in the Part 2 training. Well done for watching the training, Dawn. My question is whether they provide information on our investments that we can use to comply with our tax obligations in South Africa or wherever you are. So let's answer that first question. So I cover the various brokers. Now, what you're all going to do, first and foremost, choose a broker in the country where you are tax resident. This is going to enable you to get the tax benefits from tax deferred and tax-free allowances that you have in things like a retirement annuity, an IRA, a Roth, an ISA, a superannuation, a tax-free savings account. They're just names, different names in different countries, but they're exactly the same things. One's tax-free and one's tax-deferred. Really important that you do that. Generally in your own country as well, it's going to be the lowest cost because you're going to be investing in via your currency. So you're not going to add additional currency costs and exchanges into having to move that country monies to a different jurisdiction. Super important. And a lot of people in developing countries like India and South Africa and Brazil, that in our community, there's a lot of a culture of going, oh, you've got to get your money offshore. You've got to have this expensive offshore account. But they don't realize you don't have to have an expensive foreign account in order to have a global portfolio. So you can do that directly through your domestic platform, because with an index tracker, so say you invest in South African Rand through a South African-based platform, but in an S&P 500 tracker or in a global tracker, the underlying investment is actually going to be in US dollars. It's going to be invested in companies in the US, global companies. And you haven't had to add the complexity of foreign currency exchanges, nor utilize foreign allowances and so on. So this is the first key principle. But once you've got that base in place and you've used your domestic platform and you've got your wealthy systems going, because this is so important, you may then choose to have a global portfolio with something like Interactive Brokers. And for South Africans, it's about the only US-based and UK-based platform that will enable you to have a global portfolio with the KYC requirements in place. And that's why I love Interactive Brokers, because it's very hard to do it elsewhere. And again, for many of you in Africa, unfortunately, one of the realities is it's not life's not fair. It's not an equal playing field. You do not have access to markets in the same way for those of you that are in the US or Europe or the UK or Canada or Australia have. And so we also have to accept the restrictions and the limitations. So for many of you, you will have to have a slightly more expensive mechanism to invest, like an Interactive Brokers. But once we swallow that bitter pill, we all say, this also is going to give you protection in these kind of environments. So you open an Interactive Brokerage account. Now, because it's outside of your jurisdiction, you are going to be responsible for compiling your own tax information. Now, it's not super complicated. You will be able to get statements that will show what capital gains you've made, what dividends you've made, because those are the things that you're required to do on your tax returns. On your own domestic brokerage platform, generally they will provide tax compliance certificates for the country that you're resident in, because they're resident in that. So that's just also understanding the complexity of when you get an offshore broker, you will be liable for that. And then Dawn also says, we do already have a US dollar and a GBP account with an offshore brokerage called Ramsey Crookall, but they don't have a charting facility. It's an execution-only brokerage, and it's quite limited. I just wondered whether Interactive Brokers offers more flexibility in this regard. So there's a couple of words being put in there. So Ramsey Crookall, I think it's an Isle of Man-based investment platform. Very solid, but as you say, more limited than some of your other bigger direct execution only. So Ramsey Crookall is really good for some of the structured notes instruments that you can learn about. That's one of the assets that those structured notes fall within the fixed income asset class that we've mentioned already. And so, but they are execution only, but they're limited. They're not a brokerage where you can go in and just easy design your platform. But now you said they don't have charting facilities. So this is really important that we distinguish between investing and trading. You don't need to be using charts. You don't need charting facilities. You do not need to be looking at candles and trends or any of those things. And now, I've done a lot of investing, a lot of work. I have my own direct share portfolio. What's super important is understanding the first discipline is allowing it to be simple. Do not try and time the market. Charting is about trying to time the market. It's trying to guess when is the best time to get in. So trading is when you buy and you sell and you hope to make money from the difference. Trading is a job. It's no different than if you were buying toilet paper wholesale and trying to sell it retail. That's all trading is. Trading is literally that, buying and selling. It is not investing. And so many people get confused and say, it will use the word trading and go, no, understand trading. There's nothing wrong with trading. You can trade property. If you buy a property, renovate it, do it up and what's called flipping and sell it to get the price differential, that's just trading in property. But we have to know what it is. And a lot of people say, Anne, will you teach me to trade? I'm going into a trading course. I'm going to do options trading or currency trading. Dangerous, dangerous, dangerous. These are a lot of products sold on the internet, this get rich quick scheme, and very few people make money in trading. It requires a very specific mindset, it creates a very specific behavior. It creates a lot of attention to detail. And in fact, most of the people that make money in trading are the people selling trading courses, not the traders themselves. So investing instead is when you are buying quality assets with the intention that they stay in your life, they grow in value and they earn income. So you're building up this network, they stay there. And so by putting in place a proven, regular, consistent investment strategy where you are every single month buying units of a solid portfolio of assets, this is so key. And for that, you don't even want to be looking at. In fact, it's better you don't. So, but besides that, if you do want to do direct share investing, and if you are looking at wanting to see, where trends are going, what's happening with the 30-day moving averages, in the Wealth Builders Club, we have for what we call the expander phase. We have every month a market mashup. In fact, we've got one happening tomorrow where myself and my partner, Nick, we go through the markets, we show you what's happening both in cryptos, real estate, and equities. And we look at charts to see what's happening in broad trends for other decisions, not trading. Now, there are a lot of great software packages that are free that aren't related to your broker. So don't worry about trying to get that information. And so you can use fantastic free software. You can use everything from something like Morningstar and then trade charts. Oh, Natalie, my brain's just suddenly gone dead. TradingView is the one that now it says trading software, but it's a really good free charting software that you can use. So again, be savvy, don't pay for things you don't need to, but understand why you use them. And you always only put this on top of your consistent wealth ecosystem that you've put this in place. I can't stress this enough, that habits, consistency, this base, that creates wealth. Never one investment, never one fancy chart, never one business, but this principle. So Rin has said, I want the entities that benefit from my investment to be making the world a better place, not keeping the status quo or making things worse. 3 years ago, and only armed with keywords green and ethical, I could only find 2 or 3 options for funds on my investment platform or on my employer's pension website, and they were only managed funds, not index trackers. As I'm figuring out a more informed investment journey now, what do I need to know as somebody eager to invest ethically and sustainably? Do I need to compromise on my values or needing to do a lot more acquisition of skills and knowledge investing? So Rin, I love this question. And, in Financial Freedom University, we have an entire section just on ethical, sustainable, green investing and understanding what it's truly about. So let me talk first about this principle. You say, are you going to need to suffer on your returns or needing to acquire a lot of skills and knowledge? Firstly, I think we do need to acquire skills and knowledge in investing. And this is what's so important. Knowledge is vital for us to be making informed decisions. Because just about every sector of the world, there's no shortage of the marketing jargon that is jumps on bandwagons. Through the 80s and 90s, we had the organic. Suddenly, if it had the organic label, then it could be more expensive. But actually, was it quality? Was it sustainable farming? so you had small, amazing farmers creating great produce who maybe didn't tick the compliance box, didn't get the organic stamp, but you could have, something that just ticked some compliance ISO boxes could. But people then go, oh, well, that must be better. And so what you've been seeing in the last sort of 5 years in investing world, especially with actively managed funds, is what is called greenwashing. Just relabeling a fund ethical or sustainable or fund or green fund. And this is why it's so important we're able to read a fund fact sheet. A fund fact sheet, every single fund has a sheet which has information on it. So this is like being able to read the side of the tin, what's on the ingredients. And most actively managed TV dinner investment products are so crap, you can't see what's inside of them. I mentioned in the previous Q&A, they're like that lucky packet that you couldn't see what's inside. They have fancy labels, fancy branding, that's all wow, or like, oh, you're going to get your bonus back in 5 years, but gee, you're going to get a crap product and investment now. It's so important that you have transparency in your investments, that you can see what the fund's invested in. And so you can see, is it quality? How's it performing? What are the fees? What are the expenses? And so what you're seeing is a lot of actively managed funds are just putting in labels like sustainability but we've got to get really clear. So Rin, what do you mean by ethical? What do you mean by green? What do you mean by your values? What is something that is of value to you may not be something of value to others. So many sustainability funds are about equity in the boardroom, but have nothing about the environment. You've got to get clear on what that is. And so as you start going down, being able to look at and understand what's actually the definition that they're using, because they're such broad definitions, many funds can do that. So you can't just take the name as, oh, great, that's the, Rising Phoenix Sustainability Fund from, I don't know, Momentum or Investco. We have to have the discipline of opening up and looking at it. So that is the first key thing, is looking at what that means, but getting really clear of what it is for you. But I just want to raise a point which is super important, is when we come to the ecosystem of wealth, our own wealth life, our investing is just one part of the equation. Our money flow is another. And this is why I keep stressing that these two have to work together. Where is your money going? And this is creating not only our lived reality, the wealthy life. This is why we need to know, what is wealthy for us? What do we want? What do we want to be directing? Taking responsibility for that. Because where you direct your money and how that flows through your life actually has a far bigger impact on the world than what you're going to invest in. Whilst we want to be conscious investors about our impact on the world, it's actually harder for us to accept that how we spend our money, what we spend it on, the choices we make, how we consume, is going to have a significantly bigger impact. And this is where our choices are so great. So I'm not saying don't do that, but a lot of people end up not investing or saying, oh, Anne, I don't want to invest, the stock market's bad, big corporation side. But that is not the way you're going to make a big impact. And also, there may be an aspect of compromising by investing in an index tracker. There might be the odd company that doesn't fully align to your values. But also know this, that if you have more resources available to direct to the things that matter, this is super important. We need more empowered, big-hearted, conscious people who have got the power of money to direct that, because that makes a difference. I'm able to contribute significantly to anti-poaching, to conservation activities, because I have the resources with it, not just the will. And that matters. Right now in South Africa, there are 2,000 rhinos being rewilded. And this is an extraordinary opportunity to right one of the most devastating blights that us humans have created on the onslaught of rhinos. We've just about taken them to extinction. with greed for a rhino horn that has absolutely no value. And this is how we consume as humans. Now we've been given this opportunity, and there was these 2,000 captively bred rhinos, which are now being rewilded, but it needs money and resources. And through the Financial Freedom University community and through Financially Free You Live, we've raised a significant chunk of money. And then together with my own personal contributions, a significant donation was made to the Baluli Wildlife Trust, which has been instrumental in moving this. And there's this community we have in Financial Freedom University who's enabled 120 rhinos to be brought into the greater Kruger area directly by having money that have come from investments. And this is the impact. And so each of us have to grapple with the nuance and the complexity of the world we live in, that there isn't always just a clean, simple answer. But when we look at our entire ecosystem of our money flow and our investing and how we impact the world and what we do through the choices we make, I think that is how we then get to sit in the knowledge that we are creating real sustainable wealth. Not just real and sustainable for ourselves, but for our families, our community, and the world we get to live in. Wow, I didn't expect to give you a whole lecture on that, but hopefully there was something in there for you. Great. Peter said, what would you say about the voices of doom predicting the fall of the dollar and the whole fiat money system collapse and propagation of crypto-only investing? So Peter, yes, I love it. It makes fantastic headlines. It makes great clickbait. It is a fantastic way for many of these platforms that sell, the cheat sheets and the stock tips to get the hype in. So I am very bullish on crypto, but what's super important is to understand blockchain technology. And a lot of people confuse the two things. One is a technology for more efficient journal and data systems and the use of blockchain technology versus crypto as a currency. So in a way, there's a lot of talk about the digital dollar in the US, the digital currency being put together by China, Russia, South Africa. There's a whole emerging market block. But the irony and the joke is it's a centralized currency that they're all racing to create. It's still just a centralized currency. So our fiat currency that we like to call it right now is already in a way a digital currency. It's a centralized currency. It's in different world. It's no longer backed by any gold or anything solid. It is, that is why the Fed can just print billions again at the click of a button to fuel the economy. It's just a story. It's just a fiction made up. And so, the changing the monetary system that the entire world operates on is not something that can happen just overnight. It is an entire structural system that is vast and huge. You think about just how the institutions work, how we do trades, how money flows, borrowing and cents. So whilst there's great talk about a digital currency, it's still a centralized currency system that's being proposed. I think for us to go and ever get to a point where we're truly utilizing decentralized finance and crypto is also a long way. And that was the vision of cryptology and Bitcoin when it was created, was a decentralized finance system. So where do I sit with it? I think it's interesting. I think it's an interesting debate. I think it will take a long time to shift. And what I think is more important is for people to not use the fear-mongering, the doom, to sit in paralysis, because this is the most dangerous thing. When we sit in confusion and paralysis, but what's happening here, there, this is how we never make progress. So coming back to, well, what can I control? What is known? What can I work with? And then having the resilience and the mechanism to adjust as we go. And this is why, for me, having a portfolio of assets, having exposure to different asset classes, understanding the role in it is how we create safety and certainty, and also give us the flexibility to respond to things that are changing and bring in new asset classes. So, for example, fractional investing in real estate became possible with change legislation in the US in 2012. And that's an extraordinary whole new mechanism for people to be able to put together a diversified portfolio of real estate investments globally, again, from their phone, wherever they are. The same is happening now with some fixed income assets, peer-to-peer lending, structured notes being made globally. So there's this technology and allowing ourselves to be flexible, but understanding the core principles of what makes an asset, what is value, what generates wealth is timeless. It's like gravity. They just are laws of wealth. And so it's this fine element. And when I'm saying fractional real estate, I'm talking REITs. No, I'm not. So real estate investment trusts are great. So when we're investing in real estate, there are three core ways we can do it. The easiest and simplest, and to do it via a digital platform, is in a real estate investment trust. So those who don't know, it's a fund, like an index tracker fund that owns shares in companies, and then you own a share in that fund. But a real estate investment trust is a legal structure, a trust structure that owns real estate, everything from hospitals to lifestyle centers to aged care to medical facilities to storage units to commercial properties around the world. And that physical property is owned by that trust, and then you can own a share of that trust. And so you benefit from the growth of that real estate and the dividend produced. This is not a property management company. So that you can buy via your digital brokerage platform in your tax efficient mechanism. So great starting place to get a global portfolio. Then fractional investing is truly where fractionalized development, so an individual medical building, for example, is sold through a special purpose vehicle. Shares in that can be bought. So it's like syndicated investing, but syndicates and you have to be part of that syndicate. You've got to know about it. Whereas fractional investing has now enabled those same units of a special purpose vehicle to be sold via digital platforms. So there's quite a few around the world. In the US, there's ones like Realty Mogul, and we go much deeper into this in that whole module in Financial Freedom University. But it allows you to own, instead of just shares in a trust, actual units in individual developments and build up a portfolio more directly. The downside of both the fractional investing and the REIT investing is it's not as easy to utilize leverage. And so that really becomes the third aspect. And I go deeper into leverage in part 3. So yes, part 3 becomes available tomorrow. Make sure you watch and I'll explain why leverage is so powerful and what that is. And this is where we use expansion debt, borrowing to accelerate the returns, to just get higher returns. And real estate is the easiest asset class to use leverage. It's the easiest asset class to get low cost borrowing on. And this is one of the most powerful things around real estate. And so, but generally that will then be you controlling a physical property in generally a jurisdiction that you've got access to. And so REITs, fractional investing, and then direct property are sort of the range of where you can go with how you own real estate. And of course, there are very many strategies within that. Is it commercial? Is it residential? Is it service? Is it not? That you can use to increase and play with the returns. Christina said, what happens when money comes in little by little and very scattered? How do I handle money like this? So Christina, I'm not sure if you heard my first answers about variable income, but you manage what we have. And this is what's so important. One of the key frameworks of wealth is managing our money with a framework. And we call this wealth pie, that every bit of money that comes in is allocated a job for your future, for your life now and for your future. And it doesn't matter how much it is, because it's the principle of allocating and giving money direction is so key. A lot of people say, well, when I earn more, then I'll manage it better. Well, the universe is waiting for each of us to show up and manage what we've already got before we get more. And so whether it's $10, $100, $1,000, $1 million, it doesn't matter. It's exactly the same system. And that is what's so powerful when we understand its systems and frameworks and processes and behaviors. They just get magnified as more money comes in. And as we manage things more, as we stabilize, you'll see that money flow will increase. It's just what happens Jenny said, is it better to pay off consumer debt before starting to invest monthly, or split a payment to debt and to investing? I love that question. Such a key one. Because again, debt is so crippling and devastating. Consumer debt has to go. There is no place for consumer debt in any wealthy life. That's different from neutral debt and expansion debt. So this is debt where there is no value underneath. It literally is just draining away, because consumer debt costs interest being charged. So it increases your expenses. So it increases the money flow going out. So make sure you watch the faulty money flows to also understand the impact of what I call the borrow more money flow. So absolutely, getting rid of consumer debt is no question. But one of the most dangerous things to do is wait until you're free of debt before you start investing. Because what happens is you lose the learning curve. You lose the opportunity to grow and expand, so that as your debt reduces and more money becomes available, your confidence is already there. You already know what to do. And so there's a devastating statistic of between 82 and 85% of people who manage to get out of consumer debt go back into debt. They relapse. It's a bit like people who manage to lose a whole lot of weight on a fad diet and then just come back and put it all on. It's because the focus is on getting out of debt, not creating wealth. And this is so important, because if you don't have a towards to go to, if you don't have a new set of habits to replace the old debt habit with, we just slip back into old patterns. There's just, well, I don't know what to do with the money, and it feels overwhelming. And this is why debt consolidation is also so dangerous. I know I'm going all over the place, but there's a lot that I want to share. So absolutely, Jenny, you want to put your debt blitzing plan in place, and there's a structured process to do that. Again, you'll see structure and frameworks is key, because we can automate them and then we can get on with life rather than random. And then you want to be investing. So your proportion is going to depend on how much debt you have, but you want to be allocating at least 10% of your all monies that come in is to growing your net worth. So remember, that is building assets and getting rid of consumer debt. So you could start with just very simply 50% of that, 5% to debt, 5% to investing to start, because both will increase your net worth. As your liabilities come down, your net worth goes up. So you want to be doing that at the same time. And hopefully I've explained why. Eugene said, I'm still struggling with creating business to serve my cash flow. The commerce is so difficult. A lot of spam sometimes, and I'm between jobs at the moment and the market is dead. So therefore moving forward is challenging. I understand with ETFs, you create compounded wealth. However, if you don't feed it with an accelerator like alternative income is key. If I don't, it will take forever to reach a break-free point without a big lump sum. How or what other usable accelerators can we use? I rarely hear you, Eugene. So, I mean, one of the accelerators is expansion debt, is things like real estate. I think we've got to look at what are your options, what are your skill sets. And this is when we come to look at first just creating this base. There is that commitment saying, okay, I'm just going to get it in place, starting happening. So what's super important is to do that, no matter that it feels like it might take a long time, because we've got to show up first for that. And it also gives us stability. It's doing something. Then we can start looking at what are other options. And there are so many different elements. And I absolutely get, e-commerce, there's digital businesses, there are, Amazon wholesaler kind of things. They are creating royalties and certain products. And the key thing is just to say, well, what are your skills? What are the options? What can you do? And you say, the market is just really dead at the moment. What other markets are there? Do you have skills that you can sell? One of the things that, whilst the holy grail is getting these assets working for us, we want to have passive income and we do all this that is sold. I also want to take a stand for work. I think it's a privilege to be able to work. And what I mean is be able to bring our value from ourselves to the world and get and receive value back from that. I think there's a lot of shaming around having a job, around working, earning money from our time. For me, the dangerous thing is that being our only option. But if that is an option, if you can sell your time, if you can sell your expertise, do so. Then look at, well, how do you leverage it? How do you create more value in that? How do you increase skills in a certain sector? So when we can also let go of rules we might have of how we can and can't allow money to come into our life, we free ourselves up to be just to be curious, to go, well, maybe I could do that. We've got to be careful of the meaning we give to certain ways of what is available. So obviously, Eugene, I don't know enough about your specific circumstance, but while doing it, look at, well, what are just ways that you can get the wheels of your wealthy money flow going? What skills can you sell? What can you do? What can you put in place to get that moving? And then to give that break, to break out of that place, which feels like quite a stuck place that you feel in now. And often we've just got to shake it up and go, what can I challenge about a story I have or rule that I have about how money can come into my life and what that means. A question from Diana: would it be a good idea to move my existing RA into unit trusts, in unit trust with an insurer somewhere else, or just look at the portfolio it's invested in? How do I know which portfolio to look at? I've always left it to a financial advisor, but I see now that the service fees are between 1.5% to 2.14%. It differs depending on the fund. Okay, so Diana, well done for taking the huge step to see what your costs are. And I hope you are horrified. I hope you understand the impact of a 2% fee on where your money should be going, and knowing that now part of leadership is going, you can choose to go on a path that you know is not serving you, but that's just self-abuse. And this is why I say freedom is only one step away. When we have knowledge and we know that that is actually not serving us, it is our responsibility to step off that path. So absolutely, you know that those fees are high. They don't need to be. So absolutely, I would recommend moving that retirement annuity to a platform where you can take control and have that invested in far lower cost index tracker investments. There are quite a few. The fact that you're using the word retirement annuity tells me you're in South Africa. So look at ETFSA, look at Easy Equities. Both are platforms where they have simple portfolios made up of index tracker base, where you can keep the total cost under 1%, and you don't need a financial advisor. So the fund fees are reduced, the total package fees reduced, and you get rid of the financial advisor. And just that means you will already have liberated what you already have and get that moving better. So any more money that goes in there is already in a better quality product. But it's also super important that you are investing outside of a retirement annuity as well. Because remember, a retirement annuity is limited to when you can access it, and you want to be free and have far more choices way before that. Jackie on YouTube said, would you suggest I open an account for each of my boys on the Easy Equity platforms beyond my own just opened account, to be able to leave the kids the best inheritance, for my kids? Fantastic question, Jackie. So I'm about to get on my soapbox. So I need water for that. Okay. When I'm speaking around the world, when I was doing the TV show Save Well, Spend Better in the UK, over and over and over, I ask people, why are you doing this? Why do you want financial freedom? And so many people say, Anne, I want it for my kids. I want to leave them money. I want them to never have to suffer financially. This is the gift that I want. I go, that is fantastic. But the greatest gift you can give your kids is knowing that you will never be a financial burden on them. The devastating reality is that 2 out of every 3 people in the world will rely on the charity of somebody else. They will have to depend on their kids to bail them out. They'll have to live off the charity of somebody else, and heaven forbid, the government. This is devastating. We have a pattern of intergenerational martyrdom and poverty that is handed down as a cycle and as burden. We have to change it, and especially as women. The greatest gift you can give your kids, first off, is your financial liberation, that you have sorted yourself out, that you are safe and sound. What a gift. What a gift. And know that in doing that, more is caught than taught. By you taking responsibility for your own financial well-being, for investing, for growing your money, and demonstrating that to your kids, they will get the second greatest gift, was the gift of an example of what it means to have personal leadership, personal responsibility, and to do that. And so this is the first key thing when we really get clear. And we've got to go, well, what is the story that we feel we want to leave kids piles of money, inheritances? Are we saying that we don't believe they have the wherewithal to create amazing, extraordinary lives? That they have to depend on us and have a crutch? Now, it's wonderful if there's something left over at the end, but I really do believe that this concept of intergenerational world and the point of one generation of another is to somehow leave an inheritance is devastating. This is what creates people buying into hideous life insurance products that they don't need, thinking that death is meant to be some kind of, bingo, that you die and people are like, what did we get from that? No. So understanding the role of these different things is really key. So Jackie, there might be none of this is for you, but it's an opportunity for us to talk about, what am I believing here? So Jackie, first and foremost, well done for opening your account. Get that in place. You put yourself first. Pay your freedom first. Take your personal responsibility first. Then absolutely open brokerage accounts for your kids. Teach them what's going on. Give them put money into their pensions, into retirement as part of the gifting, instead of just more stuff that gets consumed. What a better gift than another bit of plastic that will go down a river. In the UK, you can open a pension for a kid from, when they're a few weeks old, and the government will contribute to that. How crazy is that? In the US, in Canada, in South Africa, you can open a tax-free savings account for a minor from when they're born. And so again, get friends, families to Christmases, birthdays, Diwali, Eid, whatever it is. Rather put money into that. Teach your kids how to do the principles. Now, we have a program called Money Savvy Kids. It's about teaching kids how to manage money. From as young as 3, kids can start differentiating between money that they keep to grow, money that they get to spend. Get them excited, show them the power of investing, but absolutely don't do it to leave them inheritance. Do them to empower them in this lifetime, knowing that you will also never be a burden on them. So Sandra says, can I have an ISA if you're not based in the UK? No, you're not. So all your tax efficient mechanisms have to be in the place where you are tax resident. So you have to be in the US to have a Roth or an IRA or a self-directed IRA, because they are related to your tax that you pay. If you're in Canada, you have a tax-free savings account. You can have an RRSP. So you need to know what's available in your jurisdiction. Angela said, what is the best retirement calculator to use to figure out how we're doing with our current age, current investment amounts, etc., to see how far we have to go to reach our freedom net worth? So Angela, go and watch in part 2 just a straight compound calculator. So I don't know what you mean by a retirement calculator. So firstly, in part 1, you worked out what is your freedom number, what is your enough number. That is based in what is the cost of the lifestyle you want to be living and what is the net worth that you need. So what is the value of the assets? You then want to say, well, we play in part 2, show you what we call your time to freedom, that there's these different levers. Or maybe that's in part 3. No, I think it's in part 2. We talk about the 3 levers of wealth. Yes, go and have a look at that video. And in here, explain the difference between in these 3 levers of wealth. I show you that there are just 3 things that we have. The amount of money we contribute, that's the seed money, the time you have, and the rate of return. These 3 levers will determine how fast you're going to create your freedom. And so when you see this, you'll see the higher the return you can get from your investments, the faster you're going to get to freedom. And we have this choice between these 3, because after all, freedom is freedom of choice. And so this is really key, and this is where you're going to play to see how long is it going to take you to get to your freedom, what average returns you want to be getting from your portfolio, what have you already got, how are you going to make sure that works. So Angela, go and use that calculator, watch that video, and then play with the compound calculator to understand those ratios. Elise says, can you explain a bit more about fractional platforms, how they're different, example from Desjardins in Europe? Okay, so Desjardins you have different asset classes. Your stock market or equity investing is the largest and most liquid asset class there is. This is a $126 trillion market. Yes, trillion. You can't even write that out. It is enormous. It is this is all the businesses in the world that are making the world go round, that we consume, that we do. Right now we're on Zoom. Yes, that's one of the companies listed on the stock market. This is made up. So this is the biggest asset class. It's called equities, where you own shares in great businesses around the world in a very cost-effective way. So when I'm speaking about most digital brokerage platforms like Desjardins, like Hargreaves and Lansdowne, Interactive Investors, Easy Equities, CommSec in Australia, for example, these are in order to access your equity markets. And this is going to be the base portfolio. Now, your next big asset class is called fixed income. Now, generally, and I'm going to go much deeper on Sunday's webinar, so make sure you're there. Be there on time. In fact, we're going to be doing this live. We're going to be doing it twice on Sunday and Monday. There are 2 times. Go and see the times, select the time, get that into your schedule, be there. You want to be there live. They are powerful sessions. We're going to go deeper into designing this portfolio. But in your fixed income portfolio, there are things like bonds, there are loan instruments, there are structured notes. And then the third asset class in these 3 big ones is real estate, property investing. And so fractional platforms have emerged. And as I say, the change in legislation in 2012 in the US enabled real estate investments and fixed income investments for the first time to be available in a unitized way, like equities have already been done from the 50s. And that's what fractional investments. So these platforms are different from your digital platforms. They are different ones that you'll have to open in order to expose with that. But that's why you start with your equities, biggest market, and then you can add these other ones on as you go. Arab says, thank you for sharing this knowledge. I'm truly grateful. Please, can you share the link to the website for us to access easily this session? Okay, great. Well, so all of the training is on what we call the WOW Concierge page, and all the recordings there. And I see our fantastic program coordinator and concierge, Natalie, who's everybody grows to love in our community because she's just the most fantastic guide. She's already helped you there. Thank you, Natalie. Great. Eugene, if I was planning on doing your course, would it be wise if I wait before I start setting up my investment portfolio? Not at all, Eugene. And I can't wait to be supporting you and going on the journey with you and bringing you into the amazing community we have from all over the world. And you can start putting that portfolio in place. I think the key thing is first understanding the concepts. And there's no harm in just waiting a little bit to see what might go where, but just getting that first brokerage, seeing what's available, absolutely, because the more we immerse in, the more confident we get, it becomes less and less confusing. Harshila says, Easy Equities versus ETFSA. So they are different things. So Easy Equities is a broad-based digital investment brokerage platform. So you can invest in individual shares and you can invest in exchange traded funds directly. You can invest in your tax-free, your retirement annuity, and discretionary. Platform like ETFSA, it's a much more simplified offering, which for most people is absolutely fine. You can invest in, so it's all investment bundles and products through exchange traded funds. So literally that's what it says, exchange traded fund SA. So go and have a look at both, see which platform feels more comfortable to you. But they essentially go to both let you invest in your index trackers. The only difference is you won't be able to invest in individual shares on ETFSA. It's only in exchange traded funds. Kate says your philanthropy in wildlife conservation is inspiring. I visited the work of Care for Wild some years ago, and traveling out to South Africa on Saturday, it's my dream to create wealth to help conservation. Oh, Kate, I so get you. And, I think when each of us can really, it's such a privilege to get to a point where we can contribute wider, and we have to start with ourselves. I think we all want to make a difference. We want to make an impact, contribute. But there's this discipline of knowing that if we're not fully resourced emotionally, financially, behaviorally, then we're not really much use in our relationships, our families. It's not that that's the only point we have, but it's such a paradox. And I call this, selfless selfishness, when we have to say me first, that if I'm not able to fully show up in the world for my team, my family, my community, life, then that's on me. And so this is why paying ourselves first, putting ourselves first, understanding we are the greatest asset is the most important thing. And letting that be okay, because often we can feel selfish, greedy. Oh, can I be doing this? Got to look after everybody else. We've got a society that has rewarded martyrdom and sacrifice. But look at the devastation it's created. And then with that, we're trusting, our contribution can ripple out in such powerful ways, because how we get to show up in the world is amazing. And to be at that stage where now, I'm still growing my net worth, because why? I want to be able to contribute more. My lifestyle cost has not increased or changed much in 10 years. Why? Because I'm really clear of what is wealthy for me. And it feels such a relief and joy to know that I've broken that hook of I earn more, so I spend more. I earn more, I spend more, which is also called lifestyle creep. One of the most important things is to really manage FOMO. You can't be wealthy and have FOMO. If you're following what everybody else is doing and thinking, oh, you need to be having that kind of a holiday because that's what the cool people do, or needing to drive that thing or wear those things, you're fucked, because you're reacting to something outside of us. And this is why it's so important to just keep coming back. Hang on, what is true? What is true for me? And shutting out the things that will rob us and take us away into these mountains of fear and greed. And so for me, knowing that, contribution to wildlife is so key. This is the life I have. It just gives me great, great joy. And I think if each of us can do that, and it's going to be different for each of us. And at the end of the day, I think our most important job is to live the lives of greatest joy. Now, I'm not talking about happiness. They're two very different things. Joy is when we can feel safe for all of it, for its ups and downs, where we don't need to distract and numb in order to just be available for life. This is, I think, what we're called to find, that place where we just resonate, we can feel the vitality of life. And what it involves is going to be so unique and different to each of us. We talk about in Financial Freedom University flying your freak flag, because we're all going to have this freaky, strange recipe of things that make us who we are. And the more we're able to own that, be that, the more we're able to, I think, bring our full self to the world. Great. Jack says, your knowledge on finance is absolutely mind-blowing. Wish I knew about you years ago. Well, Jackie, thank you. And, I love doing these Q&As. I could do them all day long. And in Financial Freedom University, we navigate all the different asset classes. And I've been deep in this world for, wow, over 20-something years. And being able to serve and support others, demystify, guide, and show that whilst there is a lot to learn. It doesn't have to be complex and confusing. We don't have to know it all before we start. And this is what's so key. But at the end of it, we can also let it be fun and joyful and playful. And we don't have to take it all so goddamn seriously. Yeah, Peter, absolutely. It is incredible that it's not taught anywhere. And I think, it's one of the things that keeps people stuck churning, buying products, consuming. Hell, there's an entire financial industry that relies on people being ignorant and scared. Great. So it has been so wonderful connecting and sharing with you. Part 3 is available tomorrow. So make sure you dive on in and schedule the time to be with me on Sunday or Monday, whichever of those live trainings work for you. And we have another Q&A on Saturday. So let's just choose to live our wealthy life, ask those questions, connect in, engage. And thank you so much for being here, for participating, for your feedback. This is what